What is forfeited, not reissued? Shares have been cancelled out, not yet issued should be added back. Anything long-term borrowing and debentures are considered as a we borrow the money from another company is called debenture. Any expenditure which has been incurred at the beginning of this called primary expenses minus return. What is calls in arrears? Calls made by the company, not paid by the shareholder is called calls in arrears should be deducted. If the outstanding claims is given in the trial balance, that should be directly come on the liability side of the balance sheet. Hello my dear student, I am Dr. B.S. Subramaniam, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Grade College, a Temple of Excellence, MYSURU. I am going to hand Corporate Accounting 2, 4th semester, Unit 2, Session 3 of BCom in favor of accounting for life insurance. In the last session, we discussed about only valuation of balance sheet only for 10 marks. Today, in this session, we are going to discuss final accounts of insurance company. That means we are going to prepare one revenue account on what's called a balance sheet as per the schedule. We have got 15 schedule. I am going to explain today about the 15 schedule and their adjustment. So in the next period, we are going to solve the problem. Today, here in this session, I am going to explain the revenue account and I have to explain the balance sheet format and some of the important adjustment which can be given in the adjustment. So that definite problem from the examination of point two, first you have to learn the format. Today, I am going to explain the format one by one. Then we'll go to the what is actually the trial balance contains. So we'll move on. So the format goes, first is the schedule number 1, premium. So first we have to prepare the revenue account. Revenue account contains, one is the premium, that is the income. The expenses are commission paid, operating expenses, benefit paid. So what's the revenue account says? So revenue account premium, first is the premium, schedule number 1, premium. Add further bonus, utilize that I will explain. Premium. Number 2 is the commission paid. Number 3 is the operating expenses. Number 4 is the benefit paid. I am going to explain what are the inner items are. So premium, add further bonus, utilize in reduction of premium. That word is there. We declare the bonus. When you declare the bonus, so there is an expenditure to the insurance company. But what the insurance company will do, that money will be utilized as a premium. He has to pay the premium. That money will be utilized, premium will be. One side will show as an expenditure in the schedule number 4. I am going to explain schedule number 4. In the schedule number 1, it should be added to premium. So this will come from the adjustment. This will come from the adjustment. First one, add to premium. Then in the what's called schedule number 4, I am going to explain where we consider bonus as an expenditure. Then schedule number 2, commission paid. Schedule number 3, expense of management, depreciation, legal expenses. Then schedule number 4, claims by death, add claims by maturity. Last year outstanding is there, that should be deducted. Current year outstanding should be added. Then surrenders as per the trial balance. Then outstanding surrenders from the adjustment should be added. Further surrender from the adjustment which has been adjusted again in the loans should be added. Bonus in reduction of premium, already bonus is declared. And further bonus, now it is here we show as an expenditure. In the premium you show as an income. Here we show as an expenditure here, whereas in the what's called schedule number 1, you show as an income. Then, so revenue account goes premium A, 1, commission, operating expenses, benefit paid. Then we'll go to a balance sheet. Balance sheet has got 15 schedules. So one by one, I am going to explain what are the 15 schedules are. Just to learn the 15 schedule, that's all. First one is the schedule number 5, share capital. Schedule number 6, reserve and surplus. Schedule number 7, borrowings. Schedule number 8, investment. Schedule number 9, loans. Schedule number 10, fixed asset. Schedule number 11, cash balance. Schedule number 12, current asset. Schedule number 13, current liability. Schedule number 14, provision. Schedule number 15, miscellaneous expenses and losses. I will go one by one. So all four goes in the favor of revenue account. Balance sheet schedule start. Share capital schedule number 5. Reserve and surplus schedule number 6. Borrowing schedule number 7. Investment schedule number 8. 9 schedule number 9. Loans. 10 fixed asset. 11 cash balance. 12 current asset. 13 current liabilities. 14 provision. 15 miscellaneous expenses and losses. This is the format you have got. This is, see that, share capital number 5, reserve and surplus schedule number 6, borrowing schedule number 7. This is the total source. Investment schedule number 8, loans schedule number 9, fixed asset schedule number 10, cash and bank balance schedule number 11, current asset schedule number 12, current liability schedule number 13. Then you have got provision schedule number 14, miscellaneous expenses schedule number 15. So which are there? Share capital schedule number 5, reserve and surplus schedule number 6, then borrowing schedule number 7, investment schedule number 8, loans schedule number 9, 10 fixed asset schedule number 11, cash balance schedule number 12, current asset schedule number 13, current liability schedule number 14, provision schedule number 15, miscellaneous expenses and losses. This is the proper schedule. So in the schedule, what we contain, I am going to explain. First is the share capital. In exam, no, for a share capital, we say paid up capital. We say, what is paid up capital? Capital minus calls in arrears add forfeited share. What is calls in arrears? Calls made by the company, not paid by the shareholders, or calls in arrears should be deducted. What is forfeited? Not reissued. Shares have been cancelled out, not yet issued, should be added back. What is the format? Paid up capital. Share capital means this is your paid up. Paid up. What is paid up capital? Share capital minus calls in arrears add forfeited share. This means share capital minus calls in arrears add forfeited share. That's a paid up capital. Then reserve and surplus. Life fund add this accumulated balance, life fund at the end. So we prepare the revenue account where we get the surplus. If the surplus comes, that should be added. If there is a deficit, that should be deducted. Life fund at the end is given in the trial balance. You have to take this fund accumulated balance you have got. If you have got a surplus, that should be added. If there is a deficit, that should be deducted. Then come back. It's borrowing. Anything long-term borrowing and debentures are considered as a we borrow the money from another company is called debenture. Long-term borrowing. Schedule number 8, investment. So here we have investment in government, investment in shares and debenture, investment in government game, investment in house property, leasehold grant. So even leasehold is considered as an investment. Schedule number 9, loan. Loans on mortgages, pledging the asset and getting the loan, pledging the asset and getting the loan, loans on mortgages, loans against the, whatever the policy they made against the policy will issue the loan. If you have got surrender, whatever the money you have surrendered, that is adjusted against the loan. Surrender adjusted against loan. Then 10, building, machinery, freehold land, furniture. These are common item of the fixed asset. Schedule number 11, cash and bank balance, cash in hand, cash at bank. Schedule number 12, current asset, outstanding premium, interest accrued, outstanding premium as per the trial balance, agent balance, debit entry. Then deposit with RBI, debtor, claims recovered from reinsurance, tax deducted on interest and dividend. Then Current liability, creditor, agent balance, credit, debit is a current asset, credit is a current liability, reinsurance premium payable. I'm going to explain this. Outstanding management expenses, outstanding claim, surrender claims not yet paid, and it is due but not yet paid. Then provision for taxation minus income tax. So these are all the things. So any expenditure which have been incurred at the beginning of this called preliminary expenses minus return up. So I'm going to explain some of the important items which is given in the adjustment. If they given the trial balance, what will happen? If we give the trial balance, trial balance has two sides, debit side, credit side. So how do you prepare the trial balance? First, I think we already heard in the first PUC, first we have passed the journal entry to ledger, ledger to trial balance, debit side shows expenses, credit side shows incomes, debit side shows assets, credit side shows liabilities. This is a basic. Debit side shows expenses, credit side shows income, debit side shows asset, credit side shows the liability. So here, only thing, if the outstanding premium, if the outstanding premium is 4,000, directly it will come on the asset side of the balance sheet under current asset. If the outstanding premium is given the trial balance, directly it will come on the asset side of the balance sheet. Assume that this goes to end of the year. Same outstanding premium is given in the adjustment that should be added to premium schedule number 1, then asset side of the balance sheet. I will repeat. If the outstanding premium is given here, directly it will come on the asset side of the balance sheet. If the same outstanding premium is given the adjusted, add to premium in the premium number 1, that is schedule number 1, then asset side of the balance sheet. Then outstanding claims. If the outstanding claims is given in the trial balance, that should be directly come on the liability side of the balance sheet. If the outstanding claim is given in the adjustment, that should be added to claim the schedule number 4, benefit. Then it will come on the liability side of the balance sheet. I will repeat. Outstanding claim is given in the trial balance directly on the liability side of the balance sheet and that is come under current liability. If the outstanding claim is given the adjustment, there should be add to claim in schedule number 4, then liability side of the balance sheet. Regarding the outstanding premium, if it is in the trial balance, directly it will come on the asset side of the balance sheet. If the outstanding premium is in the adjustment, add to premium, then the asset side of the balance sheet. If the outstanding claim is given here, directly it will come on the liability side of the balance sheet. If the outstanding claim is given in the adjustment, it should be add to claim and then it will come on the liability side of the balance sheet. Then, if you go with the adjustment, adjustment entries, adjustment. Further bonus utilized, in reduction of premium. If this sentence available in trial balance, directly it will come under schedule number 4 as a further bonus. If the same amount has been come in the adjustment, add to bonus in schedule number 4, then it further bonus utilized in reduction of premium. So first it should be added to premium schedule number 1. Then it should go to schedule number 4. It won't come in the liability side of the balance sheet or asset side of the balance sheet. So further bonus utilized in reduction of premium. You declare the bonus But that bonus will not be given to that particular person, but that can be utilized as a premium. So your premium amount will be raised. Here, bonus is declared as an expenditure issue, as an expenditure in schedule number 4, as a premium schedule number 1. Add to premium will be raised, whereas the bonus will expenditure will be increased. So further bonus, already you have got a bonus here in the trial balance. For that bonus, further bonus will be added. So your bonus amount will be increased, nothing but an expenditure, whereas that money will be utilized as a premium. No, that premium amount will be raised. So it has got no entry in the balance sheet. What to do? Further bonus, first to add to premium, then it will come in the schedule number 4. Then the word surrender value adjusted against loans on policies. If this word is there in the adjustment, surrender value adjusted against the loans on policy. So first you show the surrender under schedule number 4 as an expenditure, adjusted and loans on policy. In schedule number 9, loans on mortgages, loans on policy. In the loans on policy, surrender should be deducted. Surrender should be deducted. Where first it will come? First it will come in the benefit 4, schedule number 4, as a surrender, as an expenditure. And when you come back to schedule number 9, in the schedule number 9, what you have got? Loans on mortgages, loans on policies there, and loans on policy, surrender value should be adjusted. That should be deducted. Double it. So the items in the trial balance should appear only once. The items in the adjustment should appear twice. I will repeat. The items in the trial balance should appear only once. The items in the adjustment should appear twice is a law. So here, surrender values in the adjustment, it should appear twice. First, it should come in the schedule number 4 as a benefit paid. Then the same amount will be adjusted in the here loans on policies. Then reinsurance premium. When it's given in the adjustment, deduct from the premium, then we have to pay, then it will come on the liability side of the balance sheet under current liability. Deduct from the premium, that reinsurance premium. Now, assume that your company is X company. We made the insurance to the tune of 50 lakh. Some article, 50 lakh. So X company made insurance article of rupees 50 lakh, ensure that for that we are getting the premium of rupees 2 lakh. We are getting the premium. So the company has got a fear because we made the insurance to the tune of 50 lakh. If something happens, we have to pay back how much money? 50 lakh. So what the company will do? It will reinsure with another Y company to the extent of 25 lakh. Who will do? X company will reinsure with Y company to the tune of 25 lakh. Whatever the premium, assume that a customer is A. Whatever the customer paying the premium to the tune of 2 lakh, 50% goes to Y. That's called reinsurance fee to the tune of 1 lakh. So 1 lakh remains with X, 1 lakh remains with Y. So, but the premium, the customer will pay the premium only to X company. X company will pay back to Y company. I will repeat. We made the insurance to the tune of 50 lakh. It's a heavy amount. What the X company will do? They will reinsure with Y company to the tune of 25 lakh. Mr. A customer who is paying the premium to the extent of 2 lakh, out of the 2 lakh, 1 lakh goes in favor of Y company. But same thing, if there is any expenses come, 50% will bear by Y, 50% will bear by X. So reinsurance premium is payable, deduct from the premium, then we have to pay back. It will come on the liability side of the balance sheet. Then reinsurance recoveries So deduct from reinsurance recoveries, deduct from the recoveries claims. Reinsurance recovery means claims recoveries. This should be deducted from the claims. Then it will come on, we have to recover. Then it will come on the asset side of the balance sheet. Claims recovered. Reinsurance recovery means claims recovered or the claims recoverable. Claims recoverable, deduct from the claims, then it will come on the asset side of the balance sheet, which you have to retain. Reinsurance premium, deduct from the insurance premium, then it will come on the liability side of the balance sheet. Whereas claims recoverable should be deducted from the claim, then it will come on the asset side of the balance sheet. Common adjustment same. Then outstanding management expenses. So in the operating expenses, we'll get the management schedule number 3. What is schedule number 1? Premium. Schedule number 2, commission. Schedule number 3, operating expenses. In the operating expense, we have got management expense. Whatever the outstanding comes in the adjustment should be added to management expense. Then it will come on the liability side of the balance sheet under schedule number 13 as a current liability. It should be added to management expenses. Then it will come on the liability side of the balance sheet. I'm explaining the common amount which is coming on the adjustment. Only an adjustment will come. So first is, this is important, further bonus utilized in reduction of premium. Add to premium schedule number 1. Then bonus, it will go to schedule number 4. Add to bonus in the benefit 4. Then premium schedule number 1. Surrender value adjusted against loans on policies. So surrender will come in schedule number 4. As a surrender is a benefit paid which has been adjusted. Loans on policy will come schedule number 9. On the loans on policy, you have to deduct the surrender. Then reinsurance premium, deduct from insurance premium. Then it will come on the liability side of the balance sheet. Claims recoverable, deducted from the claims. Then it will come. So what are the claims by death, claims by maturity, add outstanding claims, claims of the last year, minus claims recoverable should be deducted. Then it will come on the asset side of the balance sheet. So the most important, no. So first we have got revenue account. What are the contents of revenue account? One is the premium. Schedule number 1 is the premium. Schedule number 2 is the commission. Schedule number 3 is the operating expense. Schedule number 4 is the benefit. So benefit is most important. What are the things that will come in the benefit? Claims by death, claims by maturity, add outstanding claim of the current year, minus claim of the last year, minus claims recoverable that should be deducted. Then surrender, add outstanding surrender of the current year, surrender of the last year, and surrender adjusted loans on policy should be added. Then you have got annuities, you have the bonus, add further bonus declared in reduction of premium should be added. All will come in the what called schedule number 4, benefit paid. Then balance sheet schedule, share capital schedule number 5, reserve and surplus schedule number 6. Then borrowing schedule number 7, investment schedule number 8, loan schedule number 9, 10 fixed asset, schedule number 10 is fixed asset, 11 is a cash balance, that is cash in hand, cash at bank. Then schedule number 12 is the current asset, schedule number 13 is the current liability, schedule number 14 is the provision, then schedule number 15 is the miscellaneous expenses and losses. You learn the format very well. I will repeat once again in the balance sheet schedule. Schedule number 5, share capital. Schedule number 6, reserve and surplus. Schedule number 7, borrowing. Schedule number 8, investment. Schedule number 9, loans. Schedule number 10, fixed asset. Schedule number 11, cash balance. Schedule number 12, current asset. Schedule number 13, current liabilities. Schedule number 14, provision. Schedule number 15, miscellaneous expenses and losses. Revenue account, premium, schedule number 1, commission, schedule number 2, operating expenses, schedule number 3, benefit paid, schedule number 4. The items in the trial balance should appear only once. The items in the adjustment should appear twice. I will repeat. The items in the trial balance should appear only once. The items in the adjustment should appear twice. So I have explained the all important adjustment which come in the exam point of view. So you have to learn while you are solving the problem, I will explain you. If the word goes, all these words, these are from the adjustment. So outstanding claim, if it is in the adjustment, active claim, then liability side of the balance sheet. If the outstanding claims in the trial balance, directly liability side of the balance sheet. Outstanding premium, if it is in the adjustment, active premium, then asset side of the balance sheet. If it is a trial balance, directly on the asset side of the balance sheet. If you learn that while you are solving the problem, I will explain once again. In the next session, we'll have a problem, 15 marks question different. If you solve about 4 or 5 questions, that's okay from the examination rate. All things are same repeated questions will come, but be careful about the schedule. You must learn the schedule properly. All the 15 schedule have in your hand. That means whenever I ask, what's the loans on policy, you have to say schedule number 9. Premium, schedule number 1. That way you have to say. Then, if you say schedule number 3, what is schedule number 3? You have to say that borrowings. Schedule number 9, loans. Schedule number 11, cash in hand. Schedule number 15, miscellaneous expenses and loss. That way you must be prepared. And all adjustment, the items in the adjustment should appear twice. The items in the trial balance should come only once. Please learn the format and come back with preparation. Your BSS is leaving. We'll come back tomorrow with a good problem. Till then, goodbye. Meet you once again.